James Henderson, Fund Manager of Lowland Investment Company. Now, the Trust was formed in 1962 and it's never cut its dividend. So where do you expect dividends to go from now on?
I believe dividends will, for the Trust, keep growing in the future. That's not a prediction. It is what I'm working to do. The dividend has doubled in the last 10 years. The reason it's doubled is because the capital has grown. If you grow the capital, you've got more money working to grow the dividend. So I'm always working to grow the capital, and we are seeing good opportunities to grow the capital over the coming year. At the same time, the holdings, the companies in the portfolio are generating cash. A lot of them have paid their debt down. They've got high earnings cover of the dividend, so they're likely to grow that dividend in line with the earnings, and these earnings will be growing, I expect will be growing at a reasonable pace over the coming year. So we hope we will get good dividend growth as a result.
Now James, you've had some special dividends in the portfolio. Is this something you will expect to continue?
I would expect special dividends to continue because of the cash generation of companies at the moment. Companies want to keep a little bit of tightness on their balance sheet, and the easiest way of doing that is to pay out special dividends when their earnings are better than they have expected. They don't want the cash to sit idly in the company. The returns on cash are very low, so the way of doing that is to return it in specials. Last year we had special dividends from companies like Hiscox, an insurance company, and some very different companies like Elementis, which is a chemicals company. So it's across the market that this phenomenon is happening. It is a result of companies paying their debt down and having the scope, therefore, to return cash to shareholders. Therefore, I would expect there to be more special dividends next year.
Investors would have heard a lot about Tesco's. The news flow has been quite negative. Now you've bought Tesco's, which serves why some investors think of you as a contrarian manager. Do you agree with this?
Yes, I am a contrarian manager. Usually when the share price falls and it's right out of favour, a lot of the bad news is in there. It doesn't take much to change that. And I think the problems with Tesco's can be over-exaggerated. It is very strong in some communities in the UK, and I think that the turnaround won't take as long as some people predict.
Okay, finally James, growth. It seems a bit of a rarity in today's world, so where do you expect to find growth in 2015?
The global economy is growing. Global GDP will keep expanding, and companies that are servicing that growing global economy will be beneficiaries. You have to have excellent product, you have to have technological lead. If you've got those things, you'll see top lines growing because the emerging markets are still growing, and now we've got America kicking in with decent growth, and Europe has been flatlining, but it won't take a lot to see a little bit of growth in parts of Europe. As a result of these lower oil prices, people are underemphasising the importance that lower oil prices can have to some of the large industrial economies. So good quality industrials servicing this growing global economy, there will be top line growth. The top line growth will be at a time when people's costs are well controlled. The falling oil price will lower costs for some of these industrial companies. At the same time, wages are only moving up modestly. So you've got costs controlled, top lines growing, and that's a recipe for margin expansion, profit growth. That's why I'm confident about the market in the coming year.